Let's bring in Mohamed El-Erian, Chief Economic Advisor at Allianz. How do you factor all of these new lockdown measures and these new COVID cases, Mohamed, into the global growth forecast right now?
It basically means that there's a 50-50% chance of Europe going into recession. The reason why it's not higher than that is because of Germany and its manufacturing sector. But Italy, France, the UK, Spain, just to name a few, are going to see a double-digit recession. And that's bad news for companies. It is bad news for the economy. It's bad news for inequality.
I wonder how it factors into what happens here in the United States. We're dealing with a surge as well. We've been warned that we're a few weeks behind Europe in terms of rising case numbers. We're starting to see regional shutdowns in places like Chicago of certain things, but it doesn't feel like there's enough political appetite to really do what they're doing in Europe here. So what does that mean for the U.S. economy and U.S. markets?
So I was on your network 10 days ago, and I said, keep an eye on Europe, because we were learning at that time a few things. One is the second wave spreads really quickly. It does result in higher hospitalization and now death. Test and trace, the panacea, gets overwhelmed quickly, and governments try to do something that's very focused, but find it very hard to implement. So you end up with lockdown light, as the Germans are calling it, which means everything but schools, basically, or with circuit breakers, or with fire breaks, but essentially you shut down a good part of the economy. Now, it's not as bad as back in March and April, but it is notable in terms of what it does to people's confidence in addition to what they're able to do.
So Mohamed, I mean, do you think it's inevitable that the US will follow suit a month behind Europe in terms of both cases and therefore reaction to it, or whether it's because of the cases not following or just that the government is less willing to impose lockdowns again? Do you think the US can continue regardless?
So there's a scientific issue and a political issue. I think most of the science tells you that the US, unfortunately, is on the same path. So yes, we're going to have rising cases. Yes, we're going to have rising hospitalization. And unfortunately, despite better treatment, we're going to have higher death. Now, when it comes to what to do about it, there it's about politics. And governments are tough. Wilfred, you've heard me say one of the toughest things to do right now is to solve simultaneously for public health, normal economic and social interactions, and personal freedom. And no one has found a way to solve for all three. So you've got to sacrifice one. And which one you sacrifice ultimately is a political decision.
Mohamed, for the US markets, though, I mean, there's sort of a perfect storm this week, three factors applying. One of them cases, as we've just been talking about. The other is lack of stimulus. And the third, of course, is the election next week. One could also make the case that two of those could be solved as issues for the market within the space of a week. I mean, is that optimistic outlook on the US equity market a reasonable one?
So I think it is really whether you believe fundamentals matter or not. In the past, we had an even longer list. And what we found over and over again is this combination of buy the dip, there is no alternative, the fear of missing out, all that comes together, supported by central bank liquidity, and gives the market a bid. So what we're going to be testing is behavioral, Wilfred. This is all about behavioral. Will the conditioning that's been so deep and has been rewarded in the past, will it again kick in or not? The reason why people are worried about the length of the sell-off is that the longer you wait, the harder it is for this technical to kick off. So the length of the sell-off matters as much as the extent of the sell-off.
Well, it also raises the question, Mohamed, of whether Jay Powell and the Fed can come to the rescue again. Are they all in, or is there more they can do in the absence of fiscal stimulus and with rising headwinds?
So they've been all in for a while. I mean, it has been pedal to the metal for quite a while. So will they try and do something? Maybe. They are very afraid of the feedback loop from disrupted markets back to the economy. Having said that, they have a really tough situation because we're not going to get fiscal until maybe early in the year. And because of that, they're going to carry an even bigger burden. And they're coming to the point where they risk being ineffective. My own gut feeling is they're going to try and do something. They're going to try and do more QE. I don't think they extend it to equities. but I think they're going to try to do more. But the market at some stage is going to have to ask the question, is that enough? It's necessary, but isn't sufficient if we're not seeing fiscal stimulus and if we're not seeing a turnaround quickly in the economy.
But Mohamed, I guess most people expect that we will see fiscal stimulus, even if, as you say, it's not until January. But it's not like January is a year away. So perhaps volatility continues for the next couple of weeks, even a couple of months. But if we do see stimulus early next year, and of course the Fed stays supportive as everyone's expectation, will equities be a lot higher in 4 or 5 months' time than they are today?
So that question is about conditioning and behavioral. It is not. It is not about the economics of a fiscal stimulus. Markets are so disconnected from fundamentals that really it's about what maintains that disconnect. But Wilfred, don't make the mistake that many people are making. A stimulus in January is not the same as a stimulus in October, because between October and January, real damage gets created. Companies go bankrupt. People lose jobs. Income insecurity goes up. So there is the scarring element. So a stimulus in January would have to be much bigger than what would have been in October, because you're also dealing with the damage in the interim. So this notion that it doesn't matter when we get the stimulus, as long as we get it, is too partial. It does matter when you get it.
Mohamed El-Erian, always great to catch up. Thanks for joining us.
Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.